Just about there. Ready, let's go. So this week on the data front, we have a lot less noise. So we've got jobs and Fed out of the way, and Bank of England. And this week we have not got a lot. US trade balance, consumer confidence. I'm not logged in now. Hang on. I'll go away. Aussie CPI. US GDP, of course. US growth on Thursday, and that's pretty much it. Yeah, that's it. So what you're looking at here is the NASDAQ on the daily and the weekly. If you look at the weekly chart here, you can see the NASDAQ is nudged. We're channeling in this ambush zone. So COVID crush, incredulous push out of that as we weave up in this channel. We come out of the channel in 22. Late 21, early 22. 22 is rocky. The highs sell in 22, but then we find this base. But we've hit another ambush area here from last summer's resistance. So unless this NASDAQ can close above this 12,800, 12,870. We had a good couple of weeks, so we've pushed up from 50% into that zone. At the moment, we are just coming off shy of it. You can see it's a major area because it's sold here and here. It was support back here in early 21. Now it's resistance. So if we do pop up here and hold and pull back and hold, then we could run back to these highs. I think we could at least get back into 14K, maybe 15K. But I'm prepared to get short if we don't sit up here soon. So what the NASDAQ does, the rest of the market follows. That's why I'm talking to you about the NASDAQ, because if we can get a handle on what this NASDAQ's doing, then I think you can get a handle on the rest of the market. So decent, like I said, decent couple of weeks, nudge right up into that resistance, and now we are coming off. We're pulling back. So all we're doing is pulling back into this trend line support. So we've got a trend line sitting underneath here, which would see us come back into 16th of March support around about 12.5. That's not a big ask at all. So if we can pull back into 12.5 and hold, then I think we can go and find 13.5, 14. But if we stay under here, now if we close like this today, then I would start to get short around about the 750 mark, or possibly higher, or higher, obviously, if I can. But anytime this week, obviously with GDP out of the way, if we find ourselves at breaking this high on the GDP data, then get rid of the shorts and flip it. The path of least resistance at the moment is definitely up on a pullback, but it's the jury's out. Let's have a look at the Dow, because that has pulled back into support. This is a different kettle of fish altogether, in that, again, if we start from the weekly, You can see the weekly chart has had this autumn move and a lower high, and we pull back into support with a higher close off the back of this zone support. So if the Dow closes above 32.5, then we can potentially hold here and go and find 34, 35. So these are the key resistance areas here in the Dow, assuming the Dow can stay up here. The key resistance areas are going to be the 35, 36K. We did hold up on volume last week. So path of least resistance at the moment is still on the upside with the big overhang. So what's happened recently? Well, of course, the obvious thing is the frailty in the banks exposed with that Silicon Valley failure and, of course, Credit Suisse. But when you've got the Bank of Switzerland coming in and bailing out and UBS buying Credit Suisse, has it taken away the fear? Has it taken away the issues? Short to medium term, yeah, I think so. And the market thinks so, because at the moment you've got this bottoming pattern on the daily Dow. There's the daily Dow. So you've got the overhang here. I think it's viable, but I'm just waiting to see if we do reject these levels higher up. Right. Well, basically all the banks have got issues because the central banks are screwed up. They kept this rate rise cycle we've got now is the most aggressive since the early 80s. We've not seen this succession of rate rises on this level for 40 years. So hardly surprising that Deutsche Bank and others have got issues. But yeah, thanks for pointing that out. I like the gold. Huge push 2 weeks back. So to me, this is a bullish consolidation. So let's talk about levels to buy in the gold. I think the key level to buy in the gold is probably around about 1920. I did suggest a couple of weeks ago there's a gap down there, but there is in fact not a gap. I messed up a little bit there. We did gap up, or we pushed up, but we did actually complete the gap during that week of the 13th of March. So if we can come into 1920, assuming we can go that low, then I think that is viable. I have been buying. I bought 1945 today. Yeah, Goldie, the Wisdom Tree ETFs, any of the main ETFs. Now, I personally like let's have a look at let's talk about the dollar for a second. I'll explain why in a minute. If you're a Brit, but always buy the physical gold, don't get engaged in any of the other weaker ones. If you buy gold as in 0708 and you get a strong dollar and a strong gold, in other words, there's a lot of fear in the markets. You get, as a Brit with your native currency being the pound, it's a double whammy. By the time you do take profits, if the dollar's got a lot stronger, then you've accelerated your growth, your profits. So when you change because when you buy a dollar denominated ETF, most of you, if not all of you, know this, but if you buy a dollar denominated ETF and the dollar strengthens against the pound, then you got, assuming the gold is higher as well, you get profits on two levels. A, from a stronger dollar, so you can buy more pounds when you convert back, and B, growth in the gold. So the reason why I'm looking at the dollar with great detail here is that so we had a good couple of weeks into mid-March. As we come out here, we have just pulled back. We had a lower close last week on this weekly chart here on the left. You can see the huge support. This 102 on this dollar index is huge. If we come down there and tap that and hold on good GDP, that could push back into 104, 105. If we get a strong dollar on the back of that, a strong gold, sorry, on the back of that, then, and we break 2000 and go to head towards 2100, 2200, then you can really coin it in. So no telling at this stage if that's going to work, because at the moment we've got dollar weakness. But I would bid, like I said, I bought 1945 on the gold today. In fact, I've got a chart of my trade here somewhere. I'll just show you my trade momentarily. I took a screenshot. Yeah, so I bought the gold down here at this support, because that little blue line down there is the support. 50p a point, 600 quid on that trade. And that's just a day trade. And then took it off. I took it off at 58. I'm currently down close to 53. Okay, so that's that one. Right, now let's move on. Let's have a look at the FTSE. FTSE had a higher close last week. Let's look at the weekly. So we made all-time highs up here. If you make all-time highs and immediately close lower, obviously that's bearish. So we closed lower on the week beginning the 20th of Feb, pulled right back into the support at 71, 75, closed higher. So this, I think we can see 77, 77.50, at which stage I would like to get short. So 7,700 here is 22 highs. So if I'd love to see that pop back to 7,700 and then get short. So we're sitting up at the moment and doing all right. So DAX, any DAX traders in the room? DAX is performing very well this year. Big push up from October. We attempted to get back to all-time highs here early mid-March. We've closed. We look as if we could have another go at the highs. So at the moment, I would suggest there's no reason to short the DAX at the moment. See how we handle 15 and a quarter. Right, let's move on. Let's look at silver. I'm basically a big fan of commodities. I think we're in a commodity super cycle. If I will send you a link now, I'll do that now, of I did a piece on this a couple of weeks back. I'm going to send you a link. Here we go. Have a listen to this. It's my commentary on the super cycle, the commodity super cycle. Well worth a listen. Bookmark it. So silver is if we see 22.40, it's still a buy. You might see a full test of 22.25. Yeah, you might, tell you what, you might see that boomerang back to 22nd lows. If we do and that holds, then buy and look at the weekly though. That's a very strong weekly. So that's a very aggressive pullback. I think you'll be lucky to see 22.5. We're 23 at we're 23 at the moment. I'm looking ultimately long term. I think this silver we're gonna go back to 50 and beyond. I would suggest that this silver is going to be capable of going to $100, because if you fib that whole last range, that or 200% of this current range would take you up to about 70, no more, probably up to about 80. So a big move on this current range on the weekly chart will take you up to 80. I think we're capable of long term of going into $100 an ounce of silver. So I'm very bullish the gold and the silver. And this is my favorite chart of 2023. So I'll share this with you. This is wheat. Like I said, I am locked into this commodity super cycle. There's huge support down here from the 12th of July. I'm already buying, adding to my positions on this and looking for this. I'm looking for $10. Next stop, $10 if we close above 8 in the next few weeks. And into this year, I think we could see $15.80 on the wheat. Look at the volume coming in on the last Friday. That's a buy signal. New low, close above next day. There's the pullback. We're seeing $6.85 today on the wheat. Still time. If you bid on $7 or jump into some ETFs, nothing's a given. As you know, in trading, nothing is for certain, nothing is for sure. These are my predictions only. Be aware this may not work out. Always trade on the basis that your trade may not work out. Gas, suffering. So I'll leave gas for now, but I am interested in buying gas as time ticks away. Look at gold. Let's look at copper. So copper's had a big move off of the pullbacks here in July last year. The volumes are coming in on the copper. I would still hold out for, if you want to get into copper, try and see if we see if it has a bad day and dips down to 85. Otherwise, you're going to have to buy higher. Because at the moment, this one looks as if this is going to pop out. You can trade these. Obviously, if the metals are doing well, look at the miners in it. If the metals are doing well, then miners are another way of trading it. Let me just show you what the orange juice has done. This is why I'm so bullish on these commodities. A lot of these commodities are just flying. Absolutely flying. This is the lovely, very nice pullback here in November 19. So we flew up in November 16, dropped hard into November 19, and we've just broken. We've been holding this 2016 highs, and now we are going higher. If you're interested in orange juice, on a bad day, you might see 21.88. I don't think so, but you might do. So coffee, orange, not coffee, have we? That's setting up nicely. That's setting up very nicely. We've seen 19.5, not recently. Volumes are slacking right off, but if this little dip here holds, coffee might come up. Oops. Right, I haven't got a lot of time left, so let's just look at the miners then. So I'm following on from this theme of commodities. So in the UK, Pan-African went all the way down to 1290, and here we are. Most recently, we were through the 16. See if 15 is a big sticking point for this one. So we've hit resistance after this pop. You never know, you might see 14 again. If you see, look at the breakout pattern on this. So we come down to an extension level here. 15 is last year's lows. So if we dip it lower into 14, I think that's a buy. You may only see 15. It's a 50-day average. I've just added a 50-day average on the volume. That's all I've done. Good question. Yeah, so I've just added a 50-day average. These charts are pro real time, by the way. Anybody, they are, if you've got an IG account, they call them advanced charts. You can get through advanced charts, right? Let's flick through the miners. Hochschild, it's already had a push up from 61. 70 is the pullback area, was currently 76. Look at some US ones as well. Sylvania, these are, that's pulling back towards 85, 86. These are not, Sylvania doesn't do gold, I don't think. In fact, I've forgotten what metals it does dig up. You'll need to do your own research on that. In the US, you've got silver minus CDE already going on a nice run here. 300 will be a good pullback on that one. HS is a cheapy gold miner. HL, this has already come up from $3.50 to $6. If you're interested in that, wait for a pullback. TGAT, is Andy in the room? Let's have a look. Yeah, TGAT, he's bounced back to this April 22 area. No, it's not doing it still. Unless the volume comes in on the upside and we get a higher close above this, we sustain this £8 area. This one is still not viable in my book. Commodity brokers is another way of handling this. If you look at, where are they? Man Group. If I'm right about this commodity super cycle, these guys are going to go back to the top of that channel. Volumes are lovely on this Man Group. 225 is the pullback area. Might see that. So not that long ago, we're up there at 290. If we break the top of this channel, then I think we're going to go to, where are we going to go to? Well, I mean, very ambitious. It's got to be the £5 mark. Very ambitious. Don't know. Want to do it? Well, we'll find out. TPI cap, another commodity broker. That's a buy at 173. The volumes are not great. Be careful of that one. Then if you crisscross to the big boys, Glencore, If you see 420, I think that one's a buy. Elementis is a chemical company. So that's been on. This is pulled right back to a breakout area. This is a potential boomerang candidate. So if volumes are not, no, I do not like the volumes on that one. Unless the volumes really pick up here, avoid this one. And Rio. That looks like a great opportunity to get in on Rio. But again, the volumes are very poor down there. Give that more time. I'd much rather pay a higher price and see the volume come in than start buying in here and then see that dip back. It might want to go and see the 50 mark again. Actually, the volumes were on this weekly chart. The volumes were better than last week. Keep a close eye on Rio, because I think that is potentially primed. What else we got? Gem diamonds. No, okay, right. Let's have a quick look at the basics and then I'm off. So let's look at Vodafone. We have got a better level of volume today. So we got, so we broke out here on the 14th, Valentine's Day. We completed a gap fill on this breakdown on the 17th of March. We've overshot the gap fill, but the volume is beginning to show, but it's still very hesitant. But if we close above 90 on volume with a higher volume spike, or higher volume level anyway, not necessarily a spike, then I think that can go up. UQ, I talked about this one. This is misbehaving somewhat. This was a good player last year, very, very nice player on the back of the war. Very defensive stock. So we dipped back into that 315 support. Volumes are not doing it. But that's a good potential safe haven if, well, I say safe haven, a safe play if that picks up. BT. Nice run into 150. I'd be patient, try and wait for 125, 127. But if we close above 145, 150 here, that's going to work its way up to £2. Decent week last week. You may not get much more of a dip in that BT. It's hard to call, isn't it? Once things move out, it's harder to call. Sometimes you just have to come up with the money rather than wait for a deeper pullback, because this is, that's a decent three-wave move into 150. And the volume appears to be catching up with it at these levels. Rolls-Royce. I don't want to look at that. I got out too quick on this. I got out just before they broke up. Never mind. It happens. Switching across to the US, I am in this Pfizer. I do like Pfizer. Look at the volume in the last 2 weeks, 3 weeks. I think that can go back. I think that can go back to 60 and beyond. If we can get back above, well, we've got to get above 45 quickly. Because if we stay underneath this 41, this may not work. But I believe that will work. AAF. Oh, is that your Airtel? What else have we got? Let's look at. Right. This had a great run, didn't it? This is in aircraft leasing, isn't it, from memory? That is at a crucial level. Have you got back in, or are you just stalking it, Andy? Yeah, you're stalking. So you will see that we did a really nice breakout here on the 3rd of November 21. So we've gone right back to that breakup area. And volume is looking better. Oh, maybe I got confused then. I thought this one was aircraft leasing. Maybe I got it wrong then. Maybe my bout of COVID has messed my memory up. Wear those masks, ladies and gentlemen, because this COVID really knocked me out for over 10 days. It's taken me. I was confined myself to bed for a couple of days. Crazy. No, I haven't done that. I can't. I'm not even ever sure I've ever done that before in the past. Right. It's a really, really crucial area. But I would, yeah, if we see a decent close up there above 110 or at least 108 on volume, then it looks good. But in the meantime, it is not attracting significant buyers. The volume needs to be above that 3K mark. And we were only just over 1K today. Right. Anything else you want me to look at? I'll do a quick. So you can see Lloyd's went back to 43 and 50. Appears to be picking up. I'd be patient a bit on a lower number if you want to get into that. Barclays. BTC. Okay, Bitcoin, right. I mean, if I'm wrong about these indices, let's just go back. Let's just have an overview again. Let's go back to where we started from. If this Nasdaq does not pop back up through 800 and closes lower than this 12.5, then hold on to your hats, because the market is shaky. Cyclically, the normal cyclical move this time of year would be to buy these dips and run it into April, May, and then take profits as we get into April, May. So we're just obviously completing March, coming into April. Typically these are still times to buy and hold. Wow, oil's come up. Yeah, I think if you look at the weekly chart, those lows was a major support level. We went right back to November 21 breakup areas at these lows. I think oil's going to see 90, 95. So any pullback tomorrow, if you see 70, I'm in. Right, TGA results. Okay. Dividend to be paid 178. That sounds like a decent divvy. Right, let's look at Bitcoin and then I'm off. Yeah, I still think I do not think Bitcoin is ready to go. So we gapped up on the 15th of Jan. We did a really neat very, very tidy gap fill on 10th of March. But look how we're going. This is very bearish. Let me just show you this. We've come, particularly this last period, we're going up on lower volume. So I think that we're going to see at least, I would have thought we'd see at least 24K. If we come back to 24K and hold on volume, and the volume picks up, then yeah, we look good. I don't think this is going to pick up from here, and I actually think we need some lower numbers in this Bitcoin, and until certain things need to happen for me on Bitcoin. We've got to see some regulation coming through. Otherwise, you know, I think we could come back to 16.5 and break down to go under 10. I actually think I prefer real assets at the moment, like these commodities, like the precious metals and the softs. I think we could come right way back down to 8.7. I mean, this is quite a decent drop. So we've got a 1, 2, 3 wave corrective wave off of a 5 wave drop. So if we start life in April underneath this 27, I can see us winding back down to this area from October 21. Too far, too fast, yeah. And the fundamentals don't stack up. Obviously, we're trading technicals here, but the fundamentals just do not stack up. You know, it's not ready for full global commercial use. It's just pie in the sky. It's emperor with no clothes at the moment, but it's going to happen. I think it's going to happen. I'm sure you know, I keep hearing a lot of people saying the same, but yeah. So those of you who know me of old, I predicted this drop from these heights. So let's just see if we get another leg down now. If I'm wrong, this is going to close above 28, close above 28.30, go and find 32 and 35 plus if I'm wrong. If I'm right, it will close under 25 and keep going. Brilliant. Yeah, I will send you the recording, no problem. Thanks for coming along. I will update you as the week unfolds best I can. And look out for other events. Tomorrow night, I'm talking about day trading and building a small account using day trading. If you want to join me on that, I will just post you the link. Do take a look at that commodity supercycle talk. I put a lot of effort into doing that. Right, let me get this link for tomorrow. There we go. Right, log into this tomorrow at 6 o'clock. Yeah, obviously got to register. But join me at 6 tomorrow. And hope to see you there. So click on that before I log out. Brilliant. Have a good evening. At least we've got live readings now. And the weather is improving. So stay safe, stay out of the way of COVID. Get those masks on when you're out, particularly in the supermarkets or whatever, because it's horrible. Have fun, and I'll talk to you soon. Thanks. Bye.